Welcome back to another episode of An Entrepreneur's Journey, where I am documenting everything I've learned that's helped me make more money in my life and teaching it to you, as well as documenting my goals, certain motivational techniques. But in this few videos, I am teaching you guys how to read a stock symbol. So a lot of people ask me, what is a stock? How do I invest in stock? I'm giving you guys the basics. So in this video, we're going to talk about what is a dividend yield. A dividend / yield. So first, you guys want to open up a Google, Yahoo, or Yahoo Finance, Google Finance, and type in a stock symbol. Now, not every stock has a dividend. What is a dividend? A dividend is a cash payout to the shareholders of the company's profits. So after the company pays for all of its expenses and R&D expenses and employees and executives, and it actually creates a profit, it's going to give out those profits to its shareholders. And it does this in the form of a dividend. So if the company has 100 stocks, 100 shares outstanding, and it made $100 profit, each shareholder is going to get $1. That's your dividend. So if you look up any stock symbol, it's not all of these have these. Penny stocks generally never have these dividend yield. Major companies have these if they choose to give them out. Dividends are not required. So a company like Amazon, for example, currently on November 30th, 2016, does not have a dividend, right? Even though they've made money, they're not issuing out a dividend. They keep reinvesting into the company. But some companies do. So pull up a company that does. I pulled up General Electric. Now this dividend, if you look at the top, it'll say DIV/yield. That's your dividend yield. That's what that means. Dividend yield. Sometimes it's abbreviated as DIV/YLD. Same thing, dividend yield. And right next to that, you're going to see two numbers. These two numbers, the first number is going to be smaller and the second number is going to be a little bit bigger. So when you look at that line that says dividend yield, it's usually right above your chart or your graph on Yahoo Finance or Google Finance. I think on Yahoo Finance is below. I'm looking at Google Finance. It's right above. It'll say dividend yield. And the first number is the amount of the last dividend, right? So if you look at GE on November 30th, 2016, you'll see that the last dividend they paid out was 23 cents. So on dividend yield, it says 0.23/2.97. What's this 2.97? That's the yield. Right, so the first number is the dividend, the last dividend they declared, the last cash payment they gave for owning one share of stock in the company. And the second number is the yield, meaning how much a year do you get for that company in dividends. So for example, today the stock is trading around $31. They say the dividend yield is 2.97, which means that for every stock you buy, you're going to make 2.97% a year on that stock in dividends. Why is this important? Well, if you go to the bank and the bank teller says, you can open up a savings account here and you get 1% interest. So for every $100, you're going to get $1 a year, right? If you look at a dividend of a company and the dividend says, whatever the number says, but then in the yield says 3%, that means if you buy $100 worth of that stock, you're going to get $3 on that company. Now, of course, there's inherent risks in the stock market, right? That stock can go down, you can lose a percentage, or that stock can go up. But the main point here is to understand what the dividend yield is. So again, the first number, when you're looking up the dividend yield on the top on those crazy little numbers that everybody's always asking me about, the first number is your dividend, is how much the cash payment was on the last dividend. The next number is your yield. How much total percentage you're going to make on your spend, on that dollar spend. So on how much the stock of you purchase. So if you purchased $1,000, you're going to make 2.9%. In this example, 2.9% on $1,000. If you spend $2,000 on stock, same thing, right? You're going to make 2.9%. Now, something important to remember is that this is a trailing number, meaning they're averaging the last 12 months. So if you want to get in depth with your analysis of whether you should buy a certain company or a certain stock, it would be prudent to see what their history of dividend payout is. Is it consistent? A lot of times people will, or sometimes I should say, certain companies will pay out a special dividend. So all of a sudden, Last month, they paid out a dividend. Now you look at the dividend yield and it says 6%. And you say, wow, that's great. But you look at the 5-year chart and they haven't paid out any other dividends, right? They don't have a history of paying out dividends. And maybe you read their quarterly or financial statements available on the SEC or on the company's website, known as their quarterly, their 10Q, I think it is. And what happens is they're saying, oh, we just paid out a special dividend because we wanted to give something to shareholders, but we're not planning on paying out another dividend. This means that although that yield was correct, there's probably a good chance that they're not going to pay out another dividend. So be careful with this. What you want to look for is companies that consistently pay out a dividend, right? Look at their 5-year, their 10-year graph. Now, what's interesting about some of these companies is that their dividend goes up. And sometimes it goes up yearly, sometimes it goes up twice a year, sometimes it goes up quarterly, sometimes it goes up every 2 years. So looking forward, this number is going to change. This yield is going to change. But basically, that's what that is. So the dividend, again, is their last payment of cash. And a dividend is after all the profits were made, they divided the profits among the shares outstanding, and they issued a certain percentage of that profit, a certain dollar amount of that profit, to each shareholder. If you own 2 shares, you're going to get twice that first number. If you own 3 shares, you're going to get 3 times that first number. Excuse me. But that yield will always be the same, right? Now, that yield fluctuates depending on the price. So, for example, if you have a $100 stock and they're saying that the yield is 5%. So remember, if you look at this on the top of Google or Yahoo Finance, you're going to see dividend, the word DIV, and then there's going to be a slash and it's going to say yield. The first number is the payment that they're making. That's how much cash you're going to get for every single share you own. So if you own 3 shares, multiply that first number by 3. And that's how much money they're going to give you per dividend payout. Now, if you look at the graph, it'll tell you how often they pay their dividends. Sometimes that dividend payout is yearly. Sometimes that dividend payout is quarterly. A lot of times it's quarterly. Sometimes that dividend payout is monthly. Now, that yield will change, right? So, for example, if you have a stock that's $100 and they say it's a 5% yield, that means, remember, over the course of a year, you're going to make 5%, meaning the last stock or the last dividend payment isn't 5% of $100, right? Most of it's divided by how many times they issued that dividend. So if they issued it 4 times, that payout is going to be $125 each time, right? 125 times 125 times 125, 4 times is $5. There's your 5%. You got that 4 times over the course of the year, you have 5%. Now, what happens tomorrow? There's great news. They sell a couple $100 billion in products or services, and the stock price, investors get all happy. The stock price goes up to $200. But they're not planning on raising the dividend. They're still only going to pay out $5. This means now your yield is 2.5%, right? $5 compared to a $200 stock price is 2.5%. So why is this important? This is important when you're investing because you want to know what kind of money you're getting back. Unless you're a speculator, someone that's buying just on the notion that the stock might go up or down, or a whole investor, you're usually looking for a return, and the returns come in the form of a stock dividend. So understanding the yield of the stock and how much that stock is going to bring you back per year is important. Now, a quick note on dividends. A lot of places where you can buy stock, like an Ameritrade, like a Scottrade, even Merrill Lynch, Morgan Stanley, they have what they call a dividend reinvestment program. This means instead of opting for that cash every quarter, every month, or every year, whenever they pay that dividend, they allow you to automatically grab that money and just buy more stock in the company. Now, let's take GE for an example, which is now trading at November 30th, 2016. I'm not recommending any of these stocks. I'm just using them as an example. If you choose to have a dividend reinvestment program on GE and you only bought 1 stock for argument's sake, so you bought one for $31, and next month at the end of December, they're going to pay out a dividend of 23 cents. You can't buy a whole share, a whole stock for 23 cents, right? The stock is going for $31. What they'll do is they'll buy you a fractional share. So in your Ameritrade account and your Morgan Stanley account, it'll show up as 1 share 0.02 or 0.03, whatever that dividend can purchase at that time, right? Because the stock price fluctuates, so it'll be different each time. But that's what a dividend yield is, guys. Let me know if you have any other questions. I love dividend stocks. I think it's very important to have them in your portfolio. It's a great way to have passive income. Remember, stocks are not something that you want to trade in and out of yearly. Stocks are a long-term investment. They're a long-term investment, right? Generally 7 to 10 years, you want to keep that stock in the stock market, and it'll show you a healthy return as inflation and the economy improves. But that's what a dividend stock, that's what a dividend yield is. If you have any other questions or you feel like I didn't explain it right, comment in the YouTube section and I will make sure to reply to your comments, or ask me on Twitter at Nicholas Coriano, NicholasCoriano. Thanks for joining me on another episode of An Entrepreneur's Journey. We'll be back shortly.